Alright, I'm starting with $100 and flipping it into 1,000 trading stock options, more specifically swing trading stock options. A stock I've been watching lately is Barrick Gold. I just drew this wedge, this sideways triangle here on it last week, and I expected it to pop out. I missed that move, and it did end up breaking out. It took a stab right here at getting back to the 50-day moving average, almost did it, came back down. Took another stab at hitting the 50, came back down. You can see it got perfectly stuck on this line. Like, think about it, this line was already here before this happened. It almost came down perfectly right here to my trend line that I had drew, my top trend line, which now became the bottom trend line. Bounced off of that, appeared to get stuck right here at this, what was the bottom trend line. So what was support became resistance, which is common. And now we've got on the 4 hour, we've got this big candle that broke above this line and closed above this line. So since this candle closed green above this line, I'm interested in getting in to the upside. I see this going up to the 50-day moving average. So I see this coming all the way back up to here. I think it's going to bounce around the 1980s, and there's plenty of money to be made off of that. So I'm going to go to options. I want to get an option that has at least 2 weeks time on it, because that's what I prefer. So if I can get more time, you know, the better, but I want to get at least 2 weeks. So 18 days would be perfect. Right here, I like this 1950 call. It's only $50. I could get 2 contracts on that. The way I could scale out as it, you know, if and when it starts going my way. The difference between the ask and bid's only 2 cents, so the spread's not much. In the money, chance of this contract expiring in the money is 43%, but I'm not trying to really hold on to it till it expires anyway, you know, or exercise it. Theta is 0.01, so the time decay is so low. Delta 0.4, so that's good. The contract moves a lot. The price of the contract changes a lot as the price of the stock changes per dollar. Applied volatility is 32%. That's pretty good. That's the expected move. That's how much it's like expected to move, either up or down. I like 30 plus. Open interest is 274 in the call, 245 in the put, so more people think this is going to go up than down. If you go just down one more strike out of the money, down to the $20 strike, 1,100 people in the call. So way more people agree with me that this is going to go up. So that's a good sign. So I'm going to go ahead and cop 2 of these 1950s. Last thing I want to do, though, I really only want to trade the 4 hour, but I want to look at the hour for my entry. As you can see, a green candle forming on top of this line, the moving average, which is the yellow line, 50-day moving average. And I'm looking to go here, the green line, 180-day. So everything looks good on this trade for me. I like this. So I'm going to get the 18-day out. 1950 call. Let me get 2 of those. The mid price is 49, so let me see if I can get 2 for 49 real quick. Let's see if I can get filled. Alright, I just got filled on that order. Perfect. So let me pop back over to the asset, see what we got. I'm down 1%, $1 already, but that doesn't mean much because I got a lot of time on this contract, right? I have 18 days for this to work out. So it doesn't really matter what I'm at right now. So going back over to gold, I'm going to put my stop loss and my take profit. I don't like automatic take profits and stop losses because I don't like to base it on any certain percentage. Because let's say my plan is to cash out when the trade goes to here. Well, if I say I'm going to take 30 or 50%, where's 30 or 50%? And let's say that's here. Say this is 30 and this is 50%. Let's just make up a number. Why would I pull out there when I expect it to go here? So, and vice versa for the stop loss. If I think my stop loss is here, the green line, the 180-day moving average, because it is, why would I say, oh, if I hit 20%, I'm pulling out, and just pull out right here? It doesn't make sense, right? If the trade's not invalidated on the chart, I'm not pulling out. So I'm only setting manual stops with price alerts. So my take profit alerts right here at 1982, which is the 50-day moving average, right? Because this is a call. I make money as the price goes up, so that's where I'll pull out for a take profit. And the loss is just below this green line, just below the 180-day moving average, because if it goes down, I'm obviously losing money on the contract. So I'll pull out here for a profit, here for a stop loss. Now, if I want to take this one step further, if I want to be a little more cautious, I could say, all right, I see another place right here where there's a lot of support, right? A lot of support here. So I could pull my first contract right here if I want to. So I can put an alert there, and then I could pull one contract off the table here, one here, if I want to, you know, be a little more risk adverse and not be as risky. And vice versa, the same thing to the upside. I could say, I see a lot of resistance here. If you notice, it got stuck here and bounced back down twice. So there's definitely a lot of resistance here. So I could put a notification there, and I could cut my first contract here, second here. So my plan is going to be to ride this call up to here, cut the first contract, cut the second one here. If it goes against me, cut the first one here, cut the second one here. So we'll see how this plays out. All right, so gold has came up almost to my first take profit. My rule of thumb is if it comes within 5 cents, I can pull it, because it doesn't always hit the exact spot that I mark. So as you can see, I have it marked for 1960 and it's 1956. So really that's close enough to take one off the table, just to pull one contract, take some risk off the table. So I'm gonna sell one contract. So let me come in here and sell one. Let's see, the mid price is 60, so let's see if I can get 60. I only want to sell one for 60, not both yet. So we'll see if I can get filled for 60. All right, now I just got to make a judgment call because it's just sitting here bouncing at 1955. So when I come over to the contract, 20%, $20 up, but that's on both contracts. So it's $10 a piece on each contract. It's sitting at 59 and I have my order for 60. So I'm just like trying to get 60 while it sits at 59. I could be patient and just let it hit 60, but I really need to get on the move right now. Like, I got stuff I got to do. So honestly, about to just take 59 for one of them. There we go. So I can like get this rolling, because here's what I want to do. I want to take some risk off the table by eliminating one contract. Now you can see I just have one contract. I'm up 22%, $11 on that one. And what I'm going to do is come over to gold, and I'm going to change the stop losses because I need to move them up. What would be the point of leaving the stop loss all the way down here and the second stop loss all the way down here and letting it go from all the way up here to plummeting to down here? It just wouldn't make sense at this point. This was to give it some room to breathe for the trade to work out, but since it already worked out and it already went in my direction, there's no point in letting it go all the way down to this point. So I'm going to take out the 1899 and the 1888 or whatever. There we go. Bam. Take those two stop losses out and let's move it up. I only have one contract left. I'm just going to put the stop loss just below this last candle. So if it turns around and goes just below the last candle, I'm going to get out. Otherwise, I'm going to wait for it to go up to my next take profit, my second take profit. So let me take this 1960 off the table as well, because we're pretty much already there. Last thing, as you can see, the moving average did move though, because my take profit isn't based on candles. I didn't put my take profit on any candles or any resistance point. My take profit was to the 50-day MA, the moving average. So now I have to move it a little bit. It needs to be 1972 now, and not 1981, because the moving average just came down a little bit. So if I'm looking to pull out when it smacks the moving average, that's now here. So here's how the trade's set up now. I have one contract still in. I'm 21%, 1050 up. Stop loss is right here just below this last candle. Take profits up here at the 50-day moving average. So now I'm just going to let this play out, let it hit one or the other, and I'll come back in. But at least I made some profit. At least I secured some profit and took some risk off the table already. So that's cool. All right, now again, I'm at the point where I just got to make a judgment call here, because I really want to see this thing hit the 50-day moving average, which is at like 1970-ish, but it's like 1960-ish. So I'm really only like 10 cents away. There's only like 10 cents left of a move probably. So there's not much of a move left, and I'm up 25%, 12 bucks. So I might just take that so I can close this out for the day, because the problem is if I don't close this out today and I end up closing it out tomorrow, then I'll have to wait a day for my money to settle, so then it won't be the next day till I can trade. So I won't be able to get into a trade till Thursday. But if I get out of this today, I'll be able to, the funds will settle overnight and I'll be able to trade tomorrow. So tomorrow, which is Wednesday, I'll be able to grab another trade. So probably just gonna pull out just so I can get another trade going. I mean, I'm pretty happy with this one as is, you know. I did what I thought I was gonna do. I made some money. Let me see if I can get out for 61. See if I can get out of this thing at the mid price. Oh wait, I'm sorry, I'm at the ask price because I'm asking 61. Let me change that to mid price. There we go, that's filled. Cool, so now I can just go ahead and jump out of that. I can just take what I got. But really, if you look at the account, I'm at 120, and obviously I started at 100. So that's about 20% on the account, but I'm happy with that. I mean, 20% on the first trade, and it only took one day. I can't complain. So I like that. I like those kind of swing trades, those quick little swing trades.